active trader room. Trying to work into a short here, pound yen. Can everybody see my screen okay? What's going on, Oscar? All right, so it's retracing about halfway of the wall already. I started here, unfortunately, which was down at the 8. Now we're sitting through a bigger pullback. But this 15-minute cycle is high. And there's a good chance we're going to make a lower high somewhere around here. Just have to maybe be a little bit patient. I like this 15-minute cycle. Pretty poised to roll over. Swing line right here. Guys, we're trying to partner with a couple different brokerage firms, so I've been trying out some different platforms. I'm going to try to do a screen share today. It's a little different, but I don't have all my indicators and all these charts, so I'll probably flip back and forth. What are you guys short here? Okay, yeah, let's look at euro versus the pound. See if this will work. So I'm bidding here, guys. This is my average, right around 50, 52. So I sold a little into that pop. I'm trying to get some back. All right. Now, euro versus the pound. Was it mostly cable news this morning? Yeah. What was the news? Is it CPI? Okay. Pretty much got back to pi in the 1 minute. What we want to see now is these lows break, start making some lower lows, and we can start selling the lower highs. I mean, I started here, sold some more here. I actually took some off there, and then I resold up in here. So overall, my average on the day is like down here around 47. Current position is like more like this. But here we were starting to make lower lows, so that didn't happen. But that's what we want to see again now, is start to do this. Well, let's look at some other pairs in a second. If you're sold into that any of these last two pops, you know, you can cover some here and then just keep trading around in 1 minute. I just got a piece back. Um, I was just thinking about some things here, guys. All right, so we're breaking to new lower lows in the TMS. So 1 minute's back to bearish. All right, 5 minute. We gotta kind of watch how we react to the 30. But I like if you're sold into anything up here, you can cover a little bit, and then we'll get involved in that next 1 minute rally again. But this is good. This is this is very bearish. Obviously, there's plenty of room to go lower. Look at the hourly. I guess we're holding support from yesterday. We take out 141. There's 50 to 100 pips lower over the next today and tomorrow. Yeah, so euro versus the pound, guys, good covers yesterday. It's 4-hour cycle still coming up. We could probably resell some on the hourly. Hourly cycle's high. So for the intermediate term, I'm gonna add to my core short again. It's pretty light into these lows. It's only short 50,000. So even if we push higher from here, I'm a seller. Just give me a few seconds to update the room. Back to trader room. Okay. Let's see what else. Bonds are kind of leaking lower. Let's just go around the world here. Gold's had a little bit of a bounce. Not enough. Oops. Uh, bonds are just kind of sliding into pi here. Pi is this is a hourly chart. It's kind of going sideways. You can see the same thing on the 4 hour. It's just showing anytime you get pi to start going sideways, it just can be very indicative of a range trade. So that's kind of what you have in bonds right now. I didn't make any moves there. Still just small short. Gold, we had a little bit of a bounce. Actually, more of a bounce now than we had this morning. I was looking at it here. I'm gonna put some covered fine. I'm gonna reshort a couple lots up here that I covered into lows yesterday. I like that. Even if we rally back up 1240, 1245, I'm gonna be a seller there. Just bring my core short back up. All right, what else do you guys have on it? Anything on the euro? Resell some on the 1 minute. I'm gonna short some more here. Pound yen, guys, on this bounce. So I'm gonna offer him to 1262. 1260 also. And then I'll bid back into the lows, 41.46. Too much going on. All right, well, Oscar, you tell me. What where are your cycles? What do you think? Why did you buy yesterday? Did you have a low cycle, or was it just oversold, or you just wanted to? You just talk me through your process. Okay. So yesterday, where were we yesterday? Dollar yen. Um, Yesterday we ended up failing into the 30-day. So this daily cycle is coming. That crosses, it could set us back down to 112 the next 3 to 5 days. 4 hour, 4 hour, 4 hour is still bullish here. Cycle's low, like Dave was saying. Looks good. Maybe you leak a little lower into 113. Um, I mean, we had a good pullback yesterday into the close. Decent rally back to 114. I mean, if you bought this dip on the hourly, you're supposed to take some back into this resistance. This is the right location to add. Just maybe we drift back to 113. Kind of work our size a little bit longer back here. Yeah, I think you got to just leave some room to be able to buy more down at 113. And then if we can get back above 113.60, then that opens the door for a move back to 114. But overall, dollar yen still bullish. Really, since last week, Thursday, it's kind of when it started to turn the corner. Dollar peso just keeps leaking lower. Um, kind of, it's kind of in no man's land now. I still have a quarter long, and I think I might even reduce some of my exposure. If we crack these lows, then I might just get flat and wait to see. Still a chance we could trade all the way back to 19. Let's see what happens around those lows. Dollar lira, kind of the same thing. It's doing this pullback. It's still long-term bullish. I don't see much to do there. Cable's still pretty neutral. Just kind of sliding sideways. A range trade. But I do like this wall that we set up this morning. That should have some follow through. What other numbers do we have? We're just waiting on Yellen probably for the most part. 10 o'clock. We got PPI at 8:30. Okay. This pound yen. Hope we're not in for another choppy session. Still have a nice wall here with a little bit of energy. Let's see. Might just come all the way back up here. I'm gonna wait Some more if we get here. Sold some here, kind of bidding down here. And some of you guys able to get in the black for the day yesterday? It's kind of like as soon as we ended our session, pound yen kind of started its move into lunch. Yeah, you did, Nick. That was good. Good job, man. The better you start to get at being in negative territory and getting comfortable trading in negative territory, and taking the stop early on or taking your risk off early on, trying to get it back on higher. Not, just not really getting anywhere, and then being able to battle back by the end of the day. That's high level trading. I mean, anybody can put a winner on, and it's how you deal with your losers. It's how you deal with coming back. That's what I like to see. Did John? All right. What do you guys think on this euro? I mean, did we get our close below? We did get a close yesterday. Got a close yesterday below 106.20. All right, that's the first time in a while. That's bearish. Still below the 8. So here's our 8 on the daily, just showing us the intermediate term downtrend. Because the 8's declining. The 4-hour, what was our daily cycle? Go back to the daily here. The daily cycle is low. Cycle cross basically up here last week. We had 1, 2, 3, 4, 5, 6, 7, 8-day drop. It's kind of that 8.6 count. So the cycle's low. Doesn't mean that we can't go lower. But it does mean if we rally back up here, you want more of your core short towards the top end of the cycle as far as your size, right? So be bidding below the market here to try to get some back. That's the right ebb and flow on the 1 minute. Yeah, Oscar, that's key. I mean, that's the whole art of the size. The less size over a wider area of the chart, it's easier to work a position. If you get really heavy, you kind of need the market to move immediately in your favor. It doesn't always do that. All right, you guys should be getting hit down here. Excuse me. And let's see if we can make a lower low. All right, so back to the euro. 4 hour. There's pi on the 4 hour. Guess it'll be all about yelling whether or not we bounce from here or not. Good place to cover though. Again, if we're selling into 108, which we were, now you're supposed to be covering some, which we did yesterday. So I don't have anything to do from a core short perspective. The next move for me would probably be to reshort into like 107, guys, where we have 200 on the hourly back up here. Or if we just collapse, then I guess I'd cover a little bit. And then day trade, keep making lower highs in 30-minute, 15-minute, bearish. Your 5-minute bands are kind of turned up here, but you're still below pi. 15-minute cycle's low. You'd be better off waiting for a rally on the 15-minute cycle to sell. I'm kind of breaking the bands here. I guess if you had to play it, I'd play a short. I just don't like this 15-minute cycle. Yeah, stocks are still very strong. High within the daily cycle, 4 hour, pretty high. Definitely overbought. Of course, it's not a short. Jeez, so strong. Hourly cycle is pretty high. If you're buying dips, you should be taking some off up here. You ready? You got just set PPI. I'm just gonna give it a little bit of room here. We come back to like 140, 155, back into pi. I'm gonna reshort. Machine for us. Platform. Dollar CAD's coming back into this one spot 3 level. It just can't hold a bid. Took some profits on Aussie this morning up into the highs again. Missed the chance at adding yesterday. So we got a little bit more inflation than expected. More of a reason for the Fed to raise. Dollar caught a little bit of a bid. Pound yen's just chopping around. Yeah, a little boost. All right. I'm going to offer some here at 58 at Pi, down yen. Good cover into the low. Might have just missed. Did any of you guys sell into that pop? I missed. Yeah, should have been more aggressive. Well, definitely in a 1 minute range trade. We want to really want to take these lows out. Slow that. Is it, Nick? On Tanya? That'd be good. Yeah, you're right. It's trying to, right? All right, that's a good eye. That'll be good for us. Maybe that's what we were waiting on. 15 minutes down also. Just get this 5 minute to play along. The front end of the VIX just keeps getting smoked. Uh, I don't know. It's such a tough one to go long, or someone puts a little bit bullish bet. I mean, I like your thinking, Mike, because it is pretty. Hold on, guys. Let me take this. Hello? I mean, on the VIX, I just would rather sell rallies. Stock market's so bullish. I should still be in my long puts is what I still should be in. I covered them all up. And I think the overall index is a little bit safer. It doesn't have that nasty lower lows that the front end, like VIX features the front end has, or UVXY. But the vol there's so much premium that keeps coming out of the VIX that if you go long, you really need to be short calls against it at the same time just to make up for all the theta and gamma that's coming out of it. All right, let's take some profit in the lower lows. And then I'm going to get more aggressive on this next 1 minute rally. Are you guys making some money here? Nice. I like when I hear I see Y's. Y after Y after Y after Y after that question. That's what I like to see. Yeah, so don't be don't be shy or take a good amount here, at least half of what you're short. But let's not. I don't want to see anybody getting flat here either, in case we make a lower low. Yep, yep. Cover here, and then the next 1 minute cycle up. We'll short more into it. Too bad I didn't get off any into that last rally. Just missed. Excuse me. The never-ending cough virus. It's the new flu. All right, maybe we get a BCI here. I don't like to stare too closely at the setups on the 1 minute. This is good though. Back in Bears are back in control on the 1 minute, 5 minute. We got our 30-minute cycle to roll over. Let's go all the way back to 141. Does it, Oscar? I've been looking into that. Where do you get yours? Yeah, yeah, I'm gonna get into that. Nick, you feeling the art of the size today? I gotta read this one. Yeah, Nick, I'm telling you, it's so much easier. All right. I mean, it's pretty concentrated, right? I mean, you gotta. Oh, is this a real picture? What? Wow. It just goes to show you what the human body, I mean, it reacts. What's the science behind it? So it's actually silver, or silver and just ionized differently. It makes sense though. You gotta change the polarity. Oh, that's cool. Really? Wow. Makes sense. I'd rather do something natural than doing the drug route, artificial. All right, I'm gonna bid into the 20s for some more. No, John, please. I don't. I think everybody shares the same opinion. I've been to the Amazon, and I've never heard so many natural. Oh, look at that plant. That cures this. Look at this plant. That cures that. Look at this plant. That cures that. Yeah, dangerous for sure. Uh, really, it's horrible. Yeah, problem. Society is just so, I don't know, kind of waking up to it. Oh, something's wrong with you. Here, take this. Oh, okay. Here, take this. Yeah, I think the Eastern medicine philosophy much better. I mean, there's stuff you need to do when it comes to surgery, but in general, it doesn't get to the root of the cause. It's just painting over, you know. Yeah, exactly. It's true though. The pharmacy line, every Walgreens, boy, it's those drive-through lines are always packed around here. Yep. Yeah. Yeah. Well, I'm amazed at some of those clinics in the West. Where those guys practice. I mean, I don't know what they call it, but they essentially through chant and energy transfer and speaking wave vibration. I mean, they're just changing the frequency within inside the human body, and it like literally can shrink tumors in 20 minutes just by focusing the frequency, the wave formation. 15-minute cycle is pretty low, guys. Now, so when you go from high within the cycle where we started the morning to 30 pips lower at the bottom of the cycle, make sure you take 80% of your profits. And then got to be a little bit patient on the next bounce now. Uh, yeah, Andrew, could be. You know, she's just kind of like a, I mean, the market's really shifted away from the Fed, which is nice. You know, we go through these periods where all year is the Fed all day long. Fed this, Fed that, Fed this, Fed that. So now it's shifted away more towards Trump and all this political. His more on the fiscal side, which is fine. I think what's probably going to matter more is what this Treasury Secretary and some of these guys start forming an opinion. Some of these newer guys. But I mean, if she does her job and she states the facts, I mean, facts are that the data keeps. If she really is data dependent, the data keeps supporting for them to move and move sooner. So I would expect that to be dollar bullish. Right, exactly. Shaolin and the Wu Tang could be dangerous. Fun fact of the day. Yeah, kind of in a way. There's a sell set up here in the 1 minute. If you want to reshort a piece, that's the first place to do it. Or back up in here with more size. Sounds like you just need an iPhone. I was just gonna say, is it burning holes in your pocket? Yeah, yeah, yeah. I have the brand new one. I don't know what number that is. 7. The camera's amazing. I like it a lot. It's fast. They all come with like 10 times the amount of storage too. I think before I had like 30 gigs. Now I have 120, and that's just like they're like you want 100, you want comes with 120, 240, or like 300. I was like, what did I used to have? They're like 30. Oh, uh, yeah, 120 is fine. Camera's really amazing though. Yeah, I mean, I take so many snaps of like the charts and stuff, and then before I was having to go in and delete them and delete them and delete them and delete them. I just get really annoyed when I'm trying to like save something, or and then your phone's like, oh, you don't have enough, or you go to take a picture, like take a picture of something of my girls, and then right in the moment it tells you you didn't have enough storage. It's like, oh, I need to go through and delete those. So now I think about it. And you can't bring it on a plane. All right, pound yen, guys. We probably just have to sit through a 15-minute cycle. So that last one went from 7:30, an hour and a half. So that might be the low for Yellen. I don't know. Let's see what the bond market's just waiting around for her. Stock. All right, I'm gonna sell a small piece here just because we covered the low. but I'm keeping it really small. That's kind of weird, Nick. Huh? Kim Jong Un's estranged half brother is confirmed dead in Malay, Kuala Lumpur. A good looking guy. What's your guys's What's your guys's most favorite North Korea claim? You know how they're always spouting off that they discovered this or did that. I said, "What's your most outrageous or favorite North Korea claim?" uh, I like the one that they said they put the first man on the sun. That one is hysterical. I believe it. Yeah. Well, I turned 21 in Seoul, South Korea, and I was gonna go up to that border, and I was like, that's just dumb. I mean, I don't want to be anywhere near that regime. He does. Oh, that's funny. Hey, Oscar, what's going on in Paris? They have no-go zones. They going crazy over there? Is the whole country on fire? Yeah, no go areas. Police are struggling to cope with the fallout from a plague of riots kicked off in the city's north suburbs. That's nice. So you're basically having an Arab Spring in Paris. Nice job, Merkel. Yep. Wow. These pictures, man, it looks worse than the stuff going on in Greece when they're throwing cocktails. Ay, ay, ay. Do people still travel there? Is it a tourist destination? I wouldn't. I wouldn't go there. Yeah, too bad. uh, Yeah, that makes sense. Oh, okay. Cool, Nick. Where do you live now, Nick? Have any of you guys in the States seen any like some of these protests? I haven't seen anything in Florida. Everyone seems pretty pro-Trump here. Even in the poorer communities and they don't really seem to care. Are you you're moving to Vero for sure, Nick? That's awesome. Yeah, that's kind of my sense. A lot of it's California. Yeah, I've been to Vero. It's quiet. It's pretty up there. Um, my ex-wife's uncle's uncle's father-in-law. He had big money. He came up with a lot of the advertising with the credit cards and the direct mail at the time. He had a huge house there in Vero. I've been up there. It's nice. You haven't been there? You're moving there, but you haven't been there? You've had to have been there. South France? Yeah, that sounds nice. No, that sounds good, Nick. Uh, it's good. I mean, the South is getting pretty busy. Start to get from West Palm south, it's getting pretty crowded. People keep pushing northward. Keep people keep pushing northward. In South France. Yeah, Vero. I would have to say Miami's up there in that category. Might resell some now. Kind of waiting on, still waiting on the 15-minute. This is why you got to cover up at the bottom of those 15-minute cycles down there. I'm gonna resell another tiny lot. Where's Kim been? She'd be all over this conversation. Guys, you can keep trading it around small if you want, but again, we gotta just wait for this 15-minute. So that puts us into yelling here at 10. I'm gonna grab some food. So I'm around. I'll be back. Let's check back before yelling. I'm gonna take a break here. Uh, yeah, good little, grabbed a good little cycle there. So that was good. We'll just be patient here. I'll be back in a bit. Just in front of 9, or excuse me, in front of 10 o'clock Eastern. That's when she's supposed to be talking, right? Yeah. Um, this 15-minute cycle is pretty low still. So if we push back up here into that 68, 70 area, I'm going to sell some more. I just sold 3 light lots or 2 light lots. A third one would put my average probably around 62. I'm at 52 right now. That's fine. Um, I don't really want to get too heavy in front of. Where's she even talking? She's testifying. Anyway, I'll be back on in a few. Guys, I'm shorting just another small piece. Staying patient. It's good covers into the low. Just the usual, Dave. I mean, I think the euro. I mean, I covered a pretty light on my core short on the euro, so any backup there would be nice. If we get something to 107, we want to short into that. If it flushes, you know, I'll start covering some into 105. At that point, I'll probably be flat. I'll need a bounce to reshort. So maybe even 106.5. I'll probably reshort some. Um, we'll see. It's 5-minute cycles crossing. It's just amazing the ebb and flow. It just keeps you out. It just keeps you out of the way from reshorting. I know there's plenty of times back in the day where I would have been shorting here. I'd have been shorting here, shorting more and more, and then I would have been out of the money right here. I would have been out of the money. Okay, thanks, Dave. She did. I remember that. This is just guys getting squeezed now. It's getting thin. I'm gonna sell one more small piece. Uh, Euro on the lows. Remember to widen out your size, less size over a wider range when you get around these big news events. Hey guys, I
At the last
dropped there
Humphrey
for a
Hawkins hearing,
second.
Chair Yellen, you stated that simplifying regulations for the community banks
System's
continues to be a
rebooted
focus
for
for the
some
Fed,
reason.
and I hope that remains the case. Our regulatory regime should be properly tailored and avoid a one-size-fits-all approach.
Pretty big retracement.
The Fed recently took an encouraging step in that direction.
So I'm small short, but we're out of the money by like 40 pips, so I'm just waiting here.
And I appreciate that. Another area I would like to address is the $50 billion SIFI threshold for regional banks.
This is all yen.
In prior hearings, we have discussed whether $50 billion is the appropriate threshold, and I hope we can work together to craft a more appropriate standard. My goal is to work with senators of this committee and financial regulators to better strike the balance between smart, thoughtful regulation and promoting economic growth. It's also been nearly a decade since Fannie Mae and Freddie Mac were put into conservatorship. Housing finance reform remains the most significant piece of unfinished business following the crisis, and it is important to build.
I'm going to lean short some euro, guys, and I'm going to go small, but if we bounce back, I'm going to try to just work into a short.
And I encourage
day
you,
trade,
Chair
I'm
Yellen,
going to short
and the
some
Fed to
euro.
work with this committee to help find a solution. With respect to monetary policy, it has now been nearly a decade since the Fed began easing monetary policy in the fall of 2007 in response to the emerging financial crisis.
Just keep it small. We're a little
Today,
overdone.
the Fed still holds close to $4.5 trillion in assets on its balance sheet, which includes approximately 35% of the outstanding agency mortgage-backed security market. I look forward to hearing from you on how the Fed plans to normalize monetary policy and wind down its balance sheet. The Banking Committee has a lot of work to do this Congress. My goal is to work with Ranking Member Brown and other members of the committee to identify bipartisan approaches that we can quickly get signed into law. At the same time, we plan to start working on housing finance reform, flood insurance sanctions, and legislation to boost economic growth in the country. I look forward to working with you, Chair Yellen, the Federal Reserve, and other members of the committee to tackle some of these critical issues that I've mentioned this morning, as well as a number of others. With that, Madam Chair, we look forward to your comments today. First, I turn to Ranking Member Brown.
Thank you, Mr. Chairman. I appreciate the hearing today, and Chair Yellen, thank you for. It's an honor to always to have you here. Pleasure, and your insight is always helpful to all of us. Thank you for that. Since your appearance, Madam Chair, last June, the economy has improved enough, as we know that the Fed raised the federal.
I'm going to sell out some dollar yen out of my core long
since the financial crisis.
and these new highs.
Continue to create
basically back at the high.
a slow but steady pace, some 70 plus months in a row. There finally is some wage growth. Yet there are concerns. Too many Americans who want full-time work still can't find it. Many workers have left the labor force. The gains have been not large enough and been uneven. Foreclosures and job losses hit African American and Latino communities particularly hard during the crisis. One study found that the average wealth of white families has grown 3 times faster than the rate for African American families, and 1.2 times the growth rate for Latino families over the last 3 decades. These rates will take hundreds of years for those families to match where white families are today. For affluent American stock portfolios have recovered nicely since the crisis, but for most of Ohio and for most of our states, the story is very different. The state's job growth last year was the lowest since 2009. We actually went backwards 5 out of 12 months. In many places, 1 in 4 homeowners is still underwater. As you've heard me say, and as members of this committee have heard me say, in the zip code my wife and I live in Cleveland, the first half of 2007, there were more foreclosures than any zip code in the United States of America. For Ohio manufacturers, the strong dollar continues to hurt exports. And there is uncertainty, much of it injected into the economy by this administration already and by the majority party. Can Americans continue to count on having health insurance? Will U.S. manufacturers and exporters have continued access to foreign markets? Will importers have to pay a 20% sales tax? Will immigrants to this country have access to jobs and to our universities? They don't even know what to expect tomorrow, let alone to do any kind of long-range planning. all of that our country and our economy is dependent upon. Americans elected the new president based on his promises to drain the swamp, to take on Wall Street and begin to and bring manufacturing jobs back to the industrial heartland. We're all concerned, though, when you look at some of the nominees confirmed, with virtually every Republican, virtually every time voting for amazingly ethically challenged nominees that would have stepped aside 8 years ago or 16 years ago with new presidents. We're all concerned about that. Instead of focusing on infrastructure and real job creation and tax cuts for the middle class and education and workforce development, we've seen the new administration target working Americans, furthering a billionaire special interest agenda, and threaten Wall Street reform based on the false promises that banks are not lending. False promises, some might call them lies. I think everyone in this dais can agree there are parts of Wall Street reform that could be improved and steps that could be taken to help small banks and credit unions. That's an ongoing.
Yeah, this guy's not even asking a question. Topping tail on the 5 minute. So let's see. If we take out this low, I might play it on the short side here and pick up my size. Right back at pi. This dollar yen's kind of retracing halfway to the wall. I'm going to buy in some dollar yen here, guys. And even if it pulls all the way back, I'm just going to kind of scale in. Just keep it wide. I mean, this thing could come all the way back another 20 pips.
Last June, the economy has continued to make progress toward our dual mandate objectives of maximum employment and price stability. In the labor market, job gains averaged 190,000 per month over the second half of 2016, and the number of jobs rose an additional 227,000 in January. Those gains bring the total increase in employment since its trough in early 2010 to nearly 16 million. In addition, the unemployment rate, which stood at 4.8% in January, is more than 5 percentage points lower than where it stood at its peak in 2010, and is now in line with the median of the Federal Open Market Committee participants' estimates of its longer run normal level. A broader measure of labor underutilization, which includes those marginally attached to the labor force and people who are working part-time but would like full-time jobs, has also continued to improve over the past year. In addition, the pace of wage growth has picked up relative to its pace of a few years ago, a further indication that the job market is tightening. Importantly, improvements in the labor market in recent years have been widespread, with large declines in the unemployment rates for all major demographic groups, including African Americans and Hispanics. Even so, it's discouraging that jobless rates for those minorities remain significantly higher than the rate for the nation overall. Ongoing gains in the labor market have been accompanied by a further moderate expansion in economic activity. U.S. real gross domestic product is estimated to have risen 1.9% last year, the same as in 2015. Consumer spending has continued to rise at a healthy pace, supported by steady income gains, increases in the value of households' financial assets and homes, favorable
Collar
levels of
up,
consumer
rates
sentiment,
down.
and low interest rates.
She's got her
Last
collar
year's
up.
sales of automobiles and light trucks,
Collar
the
up, rates
highest
down.
annual total on record. In contrast, business investment was
Bonds are
relatively
getting
soft
smoked.
for much of last
I'm
year,
gonna cover some of my
though it
30
posted
years.
some larger gains toward the end of the year, in part reflecting an apparent end to the sharp decline in spending on drilling and mining structures. Moreover, business sentiment has noticeably improved in the past few months. In addition, weak foreign growth and the appreciation of the dollar over the past 2 years have restrained manufacturing output. Meanwhile, housing construction has continued to trend up at only a modest pace in recent quarters. And while the lean stock of homes for sale and ongoing labor market gains should provide some support to housing construction going forward, the recent increases in mortgage rates may impart some restraint. Inflation moved up over the past year, mainly because of the diminishing effects of the earlier declines in energy prices and import prices. Total consumer prices, as measured by the Personal Consumption Expenditure, or PCE price index, rose 1.6% in the 12 months ending in December, still below the FOMC's 2% objective, but up 1 percentage point from its pace in 2015. Core PCE inflation, which excludes the volatile energy and food prices, moved up to about 1.75%.
If you bought the dip on dollar yen, you
My
can
colleagues on the
come out of some here.
expect the economy to continue to expand at a moderate pace, with the job market strengthening somewhat further and inflation gradually rising to 2%. This judgment reflects our view that U.S. monetary policy remains accommodative, and that the pace of global economic activity should pick up over time, supported by accommodative monetary policies abroad. Of course, our inflation outlook also depends importantly on our assessment that longer-run inflation expectations will remain reasonably well anchored. It is reassuring that while market-based measures of inflation compensation remain low, they have risen.
15-minute cycle is pretty high. This 1 minute's trying to bounce. Maybe we're going to make a lower high relative to here.
Meanwhile, Most survey measures of longer
Tempted to sell. I'm kind of just going to keep waiting on this 15-minute.
On balance in recent months. As always, considerable uncertainty attends the economic outlook. Among the sources of
If we trade above
uncertainty,
this topping tail, I'm just going to kill that short. I gave some back there that we made in here.
the future path of productivity growth and developments abroad. Turning to monetary policy, the FOMC is committed to promoting maximum employment and price stability as mandated by Congress. Against the backdrop of headwinds weighing on the economy over the past year, including financial market stresses that emanated from developments abroad, the committee maintained an unchanged target for the federal funds rate for most of the year in order to support improvement in the labor market and an increase in inflation toward 2%. At its December meeting, the committee raised the target range for the federal funds rate by 1/4 percentage point to 1/2 to 3/4%. In doing so, the committee recognized the considerable progress the economy had made toward the FOMC's dual objectives. The committee judged that even after this increase in the federal funds rate target, monetary policy remains accommodative, thereby supporting some further strengthening in labor market conditions and a return to 2% inflation. At its meeting that concluded early this month, the committee left the target range for the federal funds rate unchanged, but reiterated that it expects the evolution of the economy to warrant further gradual increases in the federal funds rate to achieve and maintain its employment and inflation objectives. As I noted on previous occasions, waiting too long to remove accommodation would be unwise, potentially requiring the FOMC to eventually raise rates rapidly, which could risk disrupting financial markets and pushing the economy into recession. Incoming data suggests that labor market conditions continue to strengthen, and inflation is moving up to 2%, consistent with the committee's expectations. At our upcoming meetings, the committee will evaluate whether employment and inflation are continuing to evolve in line with these expectations, in which case a further adjustment of the federal funds rate would likely be appropriate. The committee's view that gradual increases in the federal funds rate will likely be appropriate reflects the expectation that the neutral federal funds rate, that is, the interest rate that is neither expansionary nor contractionary, and that keeps the economy operating on an even keel, will rise somewhat over time. Current estimates of the neutral rate are well below pre-crisis levels, a phenomenon that may reflect slow productivity growth, subdued economic growth abroad, strong demand for safe longer-term assets, and other factors. The committee anticipates that the depressing effect of these factors will diminish somewhat over time, raising the neutral funds rate, albeit to levels that are still low by historical standards. That said, the economic outlook is uncertain, and monetary policy is not on a preset course. FOMC participants will adjust their assessments of the appropriate path for the federal funds rate in response to changes to the economic outlook and associated risks as informed by incoming data. Also, changes in fiscal policy or other economic policies could potentially affect the economic outlook. Of course, it is too early to know what policy changes will be put in place or how their economic effects will unfold. While it is not my intention to opine on specific tax or spending proposals, I would point to the importance of improving the pace of longer-run economic growth and raising American living standards with policies aimed at improving productivity. I would also hope that fiscal policy changes will be consistent with putting U.S. fiscal accounts on a sustainable trajectory. In any event, it is important to remember that fiscal policy is only one of the many factors that can influence the economic outlook and the appropriate course of monetary policy. Overall, the FOMC's monetary policy decisions will be directed to the attainment of its congressionally mandated objectives of maximum employment and price stability. Finally, the committee has continued its policy of reinvesting proceeds from maturing Treasury securities and principal payments from agency debt and mortgage-backed securities. This policy, by keeping the committee's holdings of longer-term securities at sizable levels, has helped maintain accommodative financial conditions. Thank you. I would be pleased to take your questions.
Thank you very much, Chair Yellen. And I want to get into that last issue you talked about with regard to the Fed's balance sheet. But before that, I've got 2 or 3 quick questions I just wanted to go through with you. First, Dodd-Frank established.
She's done talking. If this pound yen takes these lows out, I'm going to hit it short with some size and try to work this one
Fed Governor
back in the money.
has acted as the de facto vice chairman for supervision in various ways, including by chairing the Federal Reserve Board's Committee on Supervision
15 minutes
and
close to
Regulation,
crossing.
overseeing the large institution supervision
For 1 minute, it's just bullish.
representing the Fed at the
Still.
Financial Stability Board and in Basel, among other functions. What role do you envision for the Fed Vice Chairman for Supervision having, and how do you envision working with this person when we get one nominated? And is it your expectation that a presidentially appointed Federal Vice Chairman for Supervision will have the responsibilities that Governor Tarullo
Euro back on the lows.
including, and among other things, chairing the committee on
She was sold into that
Supervision
pop.
and negotiating on behalf of the Federal Reserve in Basel?
Chairman Crapo, I think, as you know, the entire board has responsibility for approving new rules, but the vice chair would head our supervision and regulation committee and would coordinate our efforts in this area. You would, he or she would also represent the board on international negotiations of financial regulatory standards, including representing the Fed in Basel. And beyond that, the new vice chair would fulfill any statutory obligations, such as providing semi-annual testimony to Congress on supervision. I look forward to working with that individual.
Thank you very much. Secondly, President Trump recently issued an executive order directing the Treasury Secretary to work with the member agencies of FSOC to review the extent to which existing laws and regulations promote certain core principles. First of all, do you agree that it's important to promote the core principles mentioned in this executive order? And do you plan to work with the Treasury Secretary and other members of FSOC to ensure that this review occurs?
So I certainly do agree with the core principles. They enunciate very important goals for our financial system and for supervision and regulation of it. And I look forward to working with the Treasury Secretary and other members of FSOC to engage in this review.
Thank you very much. My third question before we get to the balance sheet is Fannie Mae and Freddie Mac were put into conservatorship in 2008 and continue to dominate the mortgage market. I'm not alone in calling for housing reform and considering it the most significant piece of unfinished business following the financial crisis. Do you believe that finding a durable, comprehensive legislative solution for the housing finance market is urgently needed, and are you willing to work with us to help achieve that?
Yes, I think it's very important that Congress continue to deal with the GSEs and figure out what the government's role in housing finance should look like going forward. The goal of bringing private capital back into the mortgage market, I think, is important, and I would hope that Congress would decide explicitly on what the government's role is, and if there are guarantees that they would be recognized and priced appropriately. And we look forward to continue working with you to help achieve these objectives.
Well, thank you. And I just wanted to get your comments on those few issues before I go into this final question on the balance sheet. The Fed has said that it will not begin shrinking its balance sheet until normalization of the level of federal funds rates is well underway. Recently, some Reserve Bank presidents have suggested that it's time to consider beginning that process. What are the benefits of starting to let the balance sheet run off rather than relying solely on short-term rate hikes to tighten policy? And as short-term rates rise, is it problematic to have the large balance sheet continuing to put downward pressure on longer-term rates?
Well, Chairman Crapo, the Federal Reserve resorted to purchases of longer-term assets after the financial crisis at a time when the economy was very depressed, unemployment was very high, inflation running below our objectives, and extraordinary support was needed. But we would hope that that was a very unusual intervention and one that
New low euro.
not
Buying more dollar yen.
relying on in the future. The FOMC
It's going to
has
add to this
stated
position.
that its longer run goal is to shrink our balance sheet to levels consistent with the efficient and effective implementation of monetary policy. And while our system evolves, and I can't put a number on that, I would anticipate a balance sheet that's substantially smaller than at the current time. We would like to, in addition, we would like our balance sheet to again be primarily Treasury securities, whereas as you pointed out, we have substantial holdings of mortgage-backed securities. Now, to adjust financial,
You cover some euro if you're short euro here.
In line with our dual mandate objectives. The committee would like, to the maximum extent possible, to rely on variations in our short-term overnight interest rate to accomplish that objective. It's our traditional tool. It's the one that we have the most confidence in, that markets best understand how we set it, and we have the greatest confidence in our ability to calibrate it relative to the needs of the economy. So we do not want to use fluctuations in our balance sheet policy as an active tool of monetary policy management. So what we would like to do is to find a time when we judge that our need to provide substantial accommodation to the economy in the coming years is minimal, when we have confidence that the economy is on a solid course and the federal funds rate
Covering some more of my core euro shirt.
Ability to address weakness by cutting it. And once we have that,
Obviously pretty oversold.
we will begin to allow maturing principal from our investments to gradually and in an orderly way, we will stop reinvestments or diminish them and allow our balance to shrink in an orderly and predictable way. The committee has decided that it will not.
I think pound yen, I'm just going to kill it if we trade through these highs. It's just a small position.
We will begin to allow those assets to run off our balance sheet. So we do expect to be discussing in greater detail. We gave general guidance that we want to wait to start this process until the process of normalization is well underway, and the committee in the coming months will be discussing issues pertaining to reinvestment strategy to try to provide some further guidance.
Thank you very much. Senator Brown.
Thank you, Senator Crapo, Mr. Chairman. Madam Chair, you testified last year that the banking system was more safe, more resilient. Is that still true?
I believe so, yes. I mean, if there is much more capital in the banking system, the quantity of high quality capital, tier 1 capital has more than doubled since before the financial crisis. There's much more liquidity. I believe the financial system is much more resilient.
Thank
It
you.
was.
Thank you. Now that we know that, and I think we already knew that, I appreciate your assertion and in convincing arguments that you've made for some time. Some have remarked that banks are not lending now. Is that true?
Well, a recent survey by the National Federation of Independent Business, which is smaller businesses, indicated that only 4% of respondents were unable to get all of the loans that they needed. And the fraction of businesses ranking inadequate access to credit as their main problem stood at 2%, which is an extremely low number.
So just because people in
Lending has expanded overall by the banking system and also to small businesses, C&I lending.
just because people in high places say it's true doesn't make it so. Are U.S. banks competing? Others have said that U.S. banks can't compete. Are U.S. banks competing relative to their international counterparts?
U.S. banks are generally considered quite strong relative to their counterparts.
This is a top and tail here in this 5 minutes. So I'm just gonna relax, see what happens.
Financial crisis, and as I mentioned earlier,
On pound yen.
And their lending, their price to book ratios are substantially higher than the ratios of banks headquartered in other areas, and they're gaining market share and they remain quite profitable.
So banks are safer and more resilient. Banks are lending. Banks are able to compete with their international counterparts. Consumers, some have said consumers are worse off since the crisis. Are consumers better protected today from abusive and deceptive and fraudulent practices than they were?
Well, certainly we're focused very much on protecting consumers in our implementation of strengthening the financial system. And of course, consumers were very seriously harmed by the financial crisis, but I think we've seen a significant recovery.
And the Fed is tailoring rules, as we've discussed personally and in this forum. The Fed is tailoring rules for communities and for community banks, regional banks, the largest banks, based upon factors including size and riskiness, correct?
Yes.
Seems to me that steps taken after the crisis with higher capital requirements, as you said, with stress tests, with orderly liquidation authority, with the Consumer Financial Protection Bureau, have made our economy stronger, our financial system more stable, our banks better capitalized, and our consumers better protected. I think that if the rules are removed, as one executive said during the crisis, if the music's playing, you've got to get up.
Okay, Nick, good stuff, buddy.
The rules are removed.
We'll see you when we see you.
Almost assuredly be right back to
good stuff. Enjoy the rest of your day.
Behavior we experienced before you took this job, back before the crisis. A couple of other lines of questions, if I could, Madam Chair, Mr. Chairman. Recent executive action directs the Secretary of Treasury to chair the Financial Stability Oversight Council, FSOC, to review the rules and other activities of each member agency of FSOC, including the Fed, to determine if they're consistent with the certain core principles of the executive branch. I know the Fed and other agencies regularly review their work to make sure that the rules continue to enhance financial stability and promote safety and soundness and to protect consumers. To the extent that you provide any information or conclusions to Treasury or to FSOC about your agency's rules as part of this process, could you provide those materials to the Banking Committee?
So I don't yet have any clarity about what the process will involve, but
when you do,
we always try to work with our oversight committees to provide materials that are relevant to your oversight of us.
Thank
and
you.
We will strive to.
And we will count on that. Thank you. I have doubts about the executive order that requires federal agencies to eliminate rules, in many cases, to consumer protections. For every new rule, I'm particularly troubled by what that means for financial regulators, a little like telling the highway department to take down 2 feet of guardrails for every foot it puts up. Is it clear that, a series of questions, and I'll put them together if you would answer, is it clear that financial regulators, including the Fed, are not covered by this rule? Does it make sense to remove 2 safety and soundness rules for every new safety and soundness protection? Does it make sense to remove 2 consumer protections for every new consumer protection? Will it make our system more stable and better protect consumers from bad actors?
So I believe that the independent agencies are not covered explicitly by the rules, but let me just say that considering regulatory burden and looking for ways in issuing rules and reviewing outstanding rules, constantly looking for ways to mitigate burden, I think is an important goal. And it's one that we will have strived and will strive to achieve. And it is a legitimate and important goal.
Understanding, of course, what some people call rules and regulatory overreach, others call consumer protection and environmental protection and worker protections. Chair Yellen, last question, Mr. Chairman. I want to follow up on an issue we've talked about, diversity in the Federal Reserve System. We see the least diverse president's cabinet that we've seen any time in the last 3 decades. The presidents of 2 of the most diverse Federal Reserve districts in the country, Richmond and Atlanta, have announced their retirement. Each bank has begun its search for the replacement. What is the Board of Governors doing to ensure that a diverse set of candidates is considered for these positions?
The board consults with the search committees that are charged with nominating individuals to serve as presidents of the reserve banks, and we consistently emphasize that diversity is an extremely important goal. We ensure that the search is inclusive, that robust efforts are made to identify diverse pools, and that the boards are focused on this important goal as they go about their searches.
And then the last connected question, significant racial disparities in unemployment and wages persist everywhere, not of course just Mississippi, Louisiana, Maryland, South Carolina, places in both of these districts. What is the Fed doing? What is the Fed doing to ensure that these challenges are understood by the board of directors in these districts? What can be done by the Fed or others to address these issues?
Well, I think we are trying to address issues of high minority unemployment by adopting policies that result in a robust labor market and strong overall job conditions. Over the last year, for example, the unemployment rate of African Americans, I believe, has come down about a percentage point, moved substantially more than that for white Americans. So a strong labor market does improve the situation of vulnerable minorities, although it is, as I mentioned, disturbing that such large disparities continue to exist.
Thank you. Senator Shaw.
Taller, young, and strong.
Madam Chair, good to see you. I want to pick up the theme that Chairman Crapo got into a minute ago, dealing with the Vice Chairman of the Fed. We've been hoping that we did at one time hope that President Obama would nominate someone, but he didn't. But now, as I understand it, there are going to be 3 openings at the Fed. Trullo, this coming April, whenever it is, he's resigned. 2 other openings that there. And then your tenure, you're appointed, next February, is that correct?
Correct.
Do you intend to fulfill this last year of your appointment?
I do intend to complete my term as chair.
Sure. What will be the mechanics of how the Fed Vice Chairman will work? The chairman got into that some with the whole board. You mentioned that he would come before the committee to testify. He would represent people in the international deals, dealing with regulatory relief and regulatory affairs. You got anything else to add to that?
Well, importantly, he would chair our board committee on supervision and regulation. And that committee takes the lead on behalf of the full board in working with the Division of Supervision and Regulation to craft rulemakings that are then brought to the full board for a vote. The vice chair would head that committee and would have oversight in that role for our Division of Supervision and Regulation, and would also represent us in supervision, international supervision groups, such as the Basel Committee.
So if we have 3 new appointments to the Fed Board of Governors, that'll
Gonna take more euro into those lows,
deal with.
cover more of my short, gonna come out of some more dollar yen.
Of course, we have diverse membership,
Sure.
changes over time, and the role of the chair is to work constructively with all the governors to manage the matters that Congress is charged with.
When you're getting in the area of monetary policy, inflation, deflation, and so forth, price stability, what is the biggest challenges you're looking at all the data inside to see where inflation is rearing its head and so forth? Is it wages and salaries? Is that one of the big components? Is it energy is generally is a component there, and food's a component, but sometimes you don't count that, What is your biggest challenge in measuring, engaging, in configuring what inflation's doing or not doing?
So we look at many measures of inflation. Our objective, we recognize that food and energy are very important
Volatile, isn't it?
parts. Their consumers spend a good share of their budgets on food and energy. We do not want to ignore movements in food and energy prices in measuring inflation. So in my testimony, I began by saying that an overall comprehensive measure of price increases that includes food and energy ran at 1.6% last year. There are many different measures. We've focused explicitly in saying that we have a 2% inflation goal on the measure we regard as the best measure we have of consumer prices, which is the personal consumption expenditure price index. It's less well known than the CPI, but we think it's actually a more comprehensive measure. Now, food and energy prices are very volatile, and in looking forward over a number of years and trying to estimate where inflation is going, we often look at measures called core measures that remove food and energy prices. Wage developments, it's unclear that they have much direct effect on inflation, but generally what we've found is that in a situation where labor and product markets are tight, inflation tends to move up, and movements in wage growth gives us a sense of just how tight labor markets are.
In the area of regulations, last time you came before this committee that you alluded to, I believe it was back in June, I asked you the Federal Reserve's plans to tailor the CCAR process to provide much needed relief to smaller regional banks. On January the 30th, the Federal Reserve issued its final CCAR rule, which tailored the process for institutions that have less than 250 billion in total consolidated assets and less than 75 billion of total non-bank assets. What is the significance of what you did there, and how will that help?
I think that change will reduce burden substantially
Regulation.
for a significant number of institutions. After engaging in a 5-year review of CCAR and our stress testing methodologies, we decided that the capital planning processes of those smaller institutions could be adequately reviewed and commented on through our normal supervisory processes, and that it was appropriate to exempt them from the qualitative portion of that capital review. But we still are subjecting them to our stress tests and asking that, requiring that they conduct stress tests themselves. That is an important
All
component.
right, I'm just getting out of this
But
pound
as
the
a
end.
regulator, you will continue to monitor that. If it needs to be tailored, you'll do it, whatever it takes.
Yes, we
Just
believe
straight
very
up on the
strongly
1
in
minute.
tailoring to make sure that our regulations fit the risk profiles of particular institutions, and especially for smaller institutions, we're very well aware of the burdens that they face and are looking for every way we can find to mitigate those burdens.
Thank you.
Senator Reed.
Well, thank you, Mr. Chairman, and thank you, Madam Chair, for your leadership. Some of my colleagues in the Congress have called on the Federal Reserve to use a formula, a very strict formula, setting interest rates. Many times they refer to the Taylor rule. Could you explain to us how this would affect, particularly working Americans? How do we, would it be good or bad, and how do you explain its ramifications to our constituents?
Well, right now, the Taylor rule would call for a short-term interest rate somewhere between 3.5% and 4%, which is obviously a much higher value of the federal funds rate than the FOMC has deemed appropriate given the needs of the economy. I believe we would have a much weaker economy if in the last number of years we had followed the dictates of that rule. Unemployment would be substantially higher, the labor market would be weaker, and instead of inflation, which is running below 2%, and we want to see it move up to our 2% objective, I believe inflation would likely be lower than it is now.
So we'd see fewer jobs, higher mortgage interest rates, a weaker economy if we were essentially just automatically following the formula.
That's right. I recently, a few weeks ago, gave a speech at Stanford where I tried to explain why I thought it was appropriate to adjust the recommendations of rules like that to take into account, for example, the fact that not only the FOMC, but most outside forecasters believe that the so-called neutral rate of interest has been unusually low in the aftermath of the crisis. And the Taylor rule would assume that it's at 2%. Current estimates would put that estimate closer to zero.
There's another aspect I've been working on for years, and particularly incorporating some of the language in the Dodd-Frank bill, is ensuring that clearing platforms are used, but there is a risk because systemic failure would be significant. So can you give us an update on what you are doing, your colleagues, to ensure that these central clearing platforms are adequately protected from failure, i.e. the consumers ultimately protected from failure?
Well, we strongly believe that well-regulated and well-managed financial market infrastructures, and that would include central counterparties, play a positive financial stability role. They can help stem the propagation of disturbances, and they reduce the volume of transactions among key financial institutions. And we think they play a financial stability role, but they can also be sources of risk to the financial system if they're not themselves well managed. Title 8 of Dodd-Frank created a structure in which the Federal Reserve, the CFTC, and the SEC have oversight responsibilities to make sure that these key infrastructures of our financial system are managing their own risks successfully. And we're cooperating with the other regulators in our examinations to make sure that appropriate risk management standards are in place.
Thank you. Final question: that cyber security is the issue on everyone's mind. And you recently have advanced those proposed rulemaking, which would require board of directors to have adequate expertise. I've been involved in legislation that would apply not just to financial institutions, but a publicly held company, because the cyber threat is not limited, it is ubiquitous. Could you just briefly, very briefly, give us your sense of how important it is to get this cybersecurity expertise on board?
Well, I think cybersecurity is a major, major risk that financial firms face. I think they're very well aware of the risks, and my sense is that boards of directors generally appreciate the seriousness of cyber threats, but sometimes they don't have a comprehensive or enterprise-wide view of the institution's capabilities in this area. And so it is very important for boards to have appropriate expertise.
Thank you very much, Madam Chair. Thank you.
Senator Corker.
Thank you, Mr. Chairman. Madam Chairman, thank you for your service and being here today. I too want to thank Mr. Tarullo.
Bonds.
Didn't always agree with
Where
every
did I cover
decision he made, but
before?
we had a vigorous debate. And I do think he was a committed public servant.
Another half a point lower.
Along with Mr. Alvarez.
I'm gonna get flat all of my
Foxhole many,
30s.
many times back in 08. Again, I thank you for your service. Madam Chairman, I was interviewed earlier today, and people have always sort of hinged their futures on what you have to say, and I guess it's somewhat thankful now that it looks like you have a little bit of a partner. We knew at one time there were probably going to be no changes here, not being pejorative, it's just the environment we lived in. And yet now we look at potential tax reform, we look at potential changes to the healthcare policy, we look at things relative to infrastructure and all of that. As you see those possibilities occurring, is that affecting how you
Gonna cover some gold too that we sold earlier this morning. Pretty much sold the high.
Situation before, just again because of the environment, a very changing possibility policy environment here. Is that something that's affecting your deliberations?
So we recognize that there may be significant economic policy changes and that those changes could affect the outlook. We're very well aware of that. And we don't yet have enough clarity on what changes will be put in place to really clearly factor those policy changes into the economic outlook. So we don't want to base current policy on speculation about what may come down the line. We will wait to gain greater clarity on policy changes and try
Those
to
policy
assess.
changes, though, once you develop greater clarity on what you think is coming down the pipe, could in fact affect monetary policy decisions.
Well, it's one of many, many factors that could affect monetary policy decisions. So I think the answer is yes, they could. It exactly how depends on the timing, size, composition.
And growth,
Many
I guess, would
factors
generate
affect as well.
growth could generate additional inflationary pressures, and so paying attention to that, and that happen. And when that happens, it can happen fairly quickly, can it not?
Well, we will certainly pay attention to it. I think some policies may have supply side impacts and raise productivity growth and sustainable growth.
You mentioned something about sustainable trajectory. You're hoping the administration will develop policies that cause a sustainable trajectory relative to fiscal issues. Is there anything that you're seeing coming down the pike or being debated that has caused you to raise that issue? I agree with you, by the way, but is there something you're looking at that caused you to put a note in there? Is that just a standard line that would be in a report like this?
Well, I think we've known for many, many years that the U.S. fiscal trajectory is not sustainable. And the Congressional Budget Office's most recent forecasts show deficits increasing over the next 10-year period under their baseline, and the ratio of debt to GDP.
So nothing, it's
is
just the
rising.
standard. It's nothing that you're looking at coming out of the administration or Congress that's causing you to raise that alarm. It's more just the standard concern that many of us have that we are really conducting ourselves in a totally inappropriate way as it relates to deficits. Nothing that's being discussed policy-wise right now.
Well, I mean, some of the policies that are being discussed might well raise deficits, and in that context, they may also have impacts on economic growth and the economy's growth potential. So it's not a simple matter to evaluate, but I do think it's worth pointing out that fiscal sustainability has been a long-standing problem, and that the U.S. fiscal course, as our population ages and healthcare costs increase, is already not sustainable.
Very 100%. You gave a very fulsome answer to the balance sheet question, and I understand how the Fed funds rate is much more targetable and much more accurate. I guess what I haven't understood is just allowing the maturity. In other words, allowing these securities, $1.5 trillion or so, just to mature and rolling off. It's hard to understand how that would create vagaries, if you will, relative to monetary policy that would be hard to predict. Could you share why?
Yes, I'm sorry. I did not mean to say that it would create a problem.
Yeah.
We want to allow that process to occur in a gradual and orderly way.
Wouldn't just allowing them to mature, when they mature, they roll off, is that orderly?
Yes, it is orderly, and that's why we intend to do it that way.
But you haven't started yet. You're reinvesting now. I'm just curious why. It just doesn't seem to me.
I agree that it is orderly, and that is our desire, to have it be an orderly process, which is why we intend to allow those assets to run off as principal matures. So we recognize, however, that allowing that process to occur results in some tightening of financial conditions. And so before we turn that process on and start it, we want to make sure that we have adequate ability through our normal overnight interest rate moves to meet the needs of the economy, particularly if it were to weaken some, which it would be a long process if it's running off, and we want to make sure we have enough scope and the economy is strong enough that that runoff wouldn't create a problem for the economy.
I just want to close with a statement. I know when you were coming in and interviewing for this post and being affirmed, you mentioned to me that when times called for it, you would allow interest rates to rise, and known as being a dove, but in fact you are. I know some people criticize the rate at which those rises have taken place, probably me included, but I do want to thank you for allowing that to happen, hoping it will continue as we return to more normal circumstances. Hopefully the balance sheet will roll off, and I hope you'll continue to criticize us if we allow deficit spending to continue more so than it already is today. Thank you so much.
Thank you, Senator. And I think allowing that process to take place, that's something that will show that the economy is doing well, and the increases have been a reflection of the strength we've seen in the economy.
Senator Mendez.
Thank you, Chairman Yellen. Thank you for your leadership at the Federal Reserve. Our economy, though not perfect, has made tremendous strides since the financial crisis and ensuring the ensuing Great Recession, which wiped out nearly $13 trillion in household wealth and cost 9 million Americans their jobs. And I think these last 6 years have shown us how important and positive Wall Street reform and consumer protection has been to our economy, to strong markets, and most importantly, to American families and businesses. Now, I want to ask you specifically, as you know, healthcare accounts for nearly 20% of U.S. GDP, including not only the delivery of life-saving, life-enhancing health services, but also fueling innovations in patient care, in diagnostics, in preventative health, and research and development of cures to diseases. In response to the FY17 budget resolution that Congress passed last month, the former director of the Office of Management and Budget sent a letter to Congress saying that the resolution would add $9.5 trillion to the deficit. Recent studies have shown that a major market disruption would have a detrimental impact on the labor market, including a reduction in job growth by nearly 2.6 million jobs in 2019. My home state of New Jersey is estimated to be among the top of the list when it comes to potential job losses as a result of the spike in the number of uninsured. Furthermore, stripping nearly 30 million people of their health insurance would have a significant impact on the productivity of the American workforce. Are you concerned about how this major increase in debt, coupled with downturn in the labor market and decreased productivity, would have on the larger economy?
Well, we would have to look at what the impact is of shifts in healthcare on the economic outlook. Healthcare, as you mentioned, does account for a very significant share of spending, and a loss of access to health insurance could have a significant impact on spending of households for other goods and services, and beyond healthcare itself, have impacts on the economy. In addition, access to healthcare has, for some individuals, likely increased their mobility and diminished the phenomenon called job lock, where people are afraid to leave jobs because of losing health insurance, and that could have implications.
30-minute cycle high on pound yen is pretty high. She's almost done talking. 15 minutes right up in resistance.
Let me ask you this. In the years leading up to the financial crisis, many lenders and financial institutions exploited
I don't know. I'm just keeping an eye on it up here. If it makes lower lows again, I might come back in on the short side.
Subprime mortgages, even if they qualify for prime rates as part of the landmark.
Anyway, guys, I think I'm done here. Some good core positions working here. Covering bonds, covering gold, dollar yen, short euro, long dollars. Same global macro stuff that's been working pretty well.
The CFPB has returned almost $12 billion in relief. And more importantly, the Bureau has helped.
Anyway, guys, I think I'm gonna wrap it up. Any questions? Anything else you want to look at? All right, guys. Let's do London in the morning. So